as this business plan evolves over the next 5 or 10 years, so your industrial grows, your residential will grow, probably, as the industrial grows, is there any thought to potentially even locking more value by looking at maybe spinning off your industrial portfolio, because you've got such a big footprint, as big as any GTA player, you've got almost just as much space on the industrial side?
Yeah, it's a question we often get from investors, and we know there's a lot of value creation through our existing development and capturing some of those market rents, given where our existing portfolio is relative to market. We think that over the next few years, we can capture that value within choice. And if the market is not appreciating that value or not appropriately valuing our industrial portfolio, it gives us optionality to look at, an alternative structure like you suggested in the future. But right now, we have a real path to unlocking that value within choice.
So better returns on developing that pipeline and then look at some type of future value.
Correct.
But today, though, the model is really valuable and offers investors something most REITs can't. That stability of cash flow from the necessity-based retail, the near-term growth in cash flow from industrial, the long-term growth with development supported by a balance sheet. It's a pretty attractive vehicle, and it works very well.
Yeah, definitely very.